Muted.
Hi there, I'm Mark Sebastian, the founder of OptionPit.com, and this is the AM Volatility Report. Reminder, this is for educational purposes only. None of this should be considered investment advice. Options have risk. All right, everybody. Good to see everybody. I would like to remind everybody that we've got this owning premium and long gamma class coming up, and we've got a webinar Thursday night. So be on the lookout for that invite email. There will be one post-haste coming out. So where are we today? Well, on the back of the Trump election and Trump inauguration and some decent earnings out of Alabama, the S&P is up again, and VIX is now back to 11.5. Now, this has been one of the lows. What's interesting with the VIX this low, if you take a look, is that it's not just that the VIX is low, but at the same time, volatility premiums in VIX itself are also really light. VIX is at about a 3-month low, which normally would not elicit a 3-month low in implied volatility, but that's the case. We're about as cheap as we've gotten. So hedging costs are not excessively high. The Fed future, which is about 1340, trading, 1.9 above the cash index. That's a little high. Call it, maybe 25 cents, maybe 30. I expect that spread maybe $1.50. But given the relatively low volatility and the low option premium, that is not a bad deal. I think that hedging costs are really, really light right now. So that is kind of one of the major things I'm eyeing, is how inexpensive hedging is right now. Moving on, as I stated, Alibaba had some nice earnings, and it is off to the races, up $3.70. Looks like it's going to be going a lot higher. That's going to pull the market higher. They've got a huge market cap, and the fact their earnings went well, that's a good thing for the overall market. We've seen the other FANG stocks, Google, Facebook, and Amazon all have nice little rallies the last couple of days. Nasdaq's been real strong. Even Apple, which is still around 120 and has earnings coming up, there's some inexpensive ways to play that. I was looking, and it ain't expensive to play a long play or anything in Apple. So directional opinions are cheap, and expressing a volatility opinion around earnings is not a bad deal. That is the way I'm viewing that. Google has earnings coming up, and again, look at the vols associated with a lot of these earnings plays. It's kind of shocking. 21%, and we're well below. I mean, volatility is actually off from where Google vol was at the end of the year. So there is not a huge premium being priced into earnings, which are 2 days away. This is the cheapest earnings has been around Google in a year. Call it in the last 2 years. So it's hard. The downside of Google premiums looks like it's around 15. So not a huge haircut. Again, if one has a directional opinion or wants to express a volatility opinion, it's not that bad. Pricing is not terrible to express that. Looking at some of the names like Goldman and some of the financials, they've slowed down. They were the big market leader. They've stopped. Goldman's about, almost about 5% off its high. So there's some upside there, but, if you listen to what Steve Mnuchin had to say, he had some Glass-Steagall comments, a few other things that are a little less encouraging for the financials. Deregulation, great, but, some Glass-Steagall-y stuff might scare people a touch. And aside from that, as I look around, you've got some energy reporting, but markets as a whole just continue this kind of malaise of low volatility and choppy markets. So that's kind of the way I'm viewing things. All right, people. I hope everybody has a great day, and I will talk to you soon.